Okay, so in this video, we are looking at the 2023 higher level company question one for East Elm Limited. So you can see here it's the East Elm Limited 2023 exam, and we have the trial balance and some adjustments to do. Okay, so let's start off with adjustment number one. Mentions stock. So adjustment one in these questions is always to do with stock. Okay, that's the end of the year, so it's closing stock. Gives us the date of 1st to the 12th. So it says stock at cost on 31st to 12th was 95,200. Okay, and the figure includes damaged stock, which costs 7,200. Now has a realizable value of 25% of cost. Okay, so if it's damaged, we need to take that away. So how much is damaged? If 25% still valuable can be used, then 75% must be damaged. So we're looking for 75% of 7,200. Okay, so if you put that into your calculator, 75% of 7,200 is 5,400. Okay, so 5. So we're going to take that away, and that'll give us 89,800. And closing stock is a current asset. Okay, so that's adjustment one finished. In that question, there's no other changes to be made. Adjustment number two. It says patents incorporating 5 months investment income are being written off over a 6-year period, which commenced in 2021. Okay, now if you're not sure, go down to the bottom of the question. We are doing the books for 2022. And it says written off since 2021, which means they've done 1 year. So we need to do another 5 years. Okay, so we need to look at patents first of all. So the way I answer these questions is put it into a T account. It's a bit more easier to visualize. So patents is an asset. Again, in T accounts, we have assets, expenses, liabilities, and income on the right-hand side. So patents in this question is worth 53,300. Okay, and we know that includes 5 months investment income. Okay, now that 5 months investment income, it's going to go on the side of the account somewhere. Okay, because it's income, and we know income goes on the right-hand side. So we need to figure out how much is 5 months investment income. So if you look up here, there will be hopefully some mention of investments. We have 3% acquired on the 1st of February. So down here we have investment income, and it's 3% of 124,000 from the 4th of February. Now the 4th of February here is 11 months of the year. Okay, so we didn't have it for January, we only had it for the 11 months. So we need to get 3%. It's 124,000. Okay, and then we're going to divide that 12 and multiply by 11. So multiply by 11 over 12, same thing. And when you do that, you should get 3,410. Okay, now that 3,410 is when the profit and loss. Okay, now that's for 11 months. So for the year, we should receive 3,410. We did receive 5 months. Okay. Now 5 months to get that, we do 3,410 divided by 11 and multiplied by 5. If you do that, you get 1,550. Okay, so that's how much we received, 1,550. And that is the amount that we put in here. Okay. So 1,550 was in income. Now we've added that onto this side of paintings, okay? But we don't want it in paintings. So we need to take it back out. So I need to bring it over to the other side. To take something away in a T account, you need to add it to the other side. You can't minus, you just need to add to the opposite side. And that gets added to paintings then. So our actual paintings figure is 54,850. Okay, that's paintings. It's just two more things now we have to do in this adjustment. So first one, we should receive 3,410 for the year. We have received 1,550. So how much is due? It's just the difference. And the difference there is 1,860. Now, this is investment income. So if we haven't received it yet, we should have received it, which gives us a current asset of 1,860. Patents 54,850. We're going to take that number. And remember, it goes back to the adjustment. It says that it is being written off over a 6-year period, which commenced in 2021. So we have 5 years left because we've already done 2021. We're in 2022 now. So to write it off over 5 years, it's going to be the same amount each year. So 54,850 divided by 5 will give you 10,910. The paint's written off. This here is a admin expense in the P&L. So highlight as that and put a circle around it. Now what we need to do is just get our new paintings figure. Okay, so it was 54,850. We've written off 10,910. Will give us a new paintings figure of 43,940. Okay, and that is a intangible asset in the balance sheet. So that's note number 2 finished. Now we need to go on to note number 3. No record was made in the books for goods in transit. Okay, goods in transit just means that we've bought the goods, but we haven't received them yet. In transit means they're being transported to us at the minute. So they could be on a van somewhere or on a ship the way to us. Okay. And it's the end of the year. So it's 31st of the 12th. So if we've bought the goods belong to us, we haven't received them yet. So there's going to be a few things that we need to add that into. Okay. So one thing we're concerned with is the cost price. It tells us that we bought the goods for 19,680. Okay. And that is including VAT. Okay. So the cost price without VAT would be 100%. Then you have the VAT of 23. So the full amount is going to represent 123%. Okay, so you're just adding those two figures together to 123%. Now, what do we have at the minute? We have full amount, which includes VAT, because it says here including VAT. That's key. Sometimes it'll say excluding. This time it says including. So 19,680 is the figure including VAT. And if you do the maths there, you'll find out that 23% is 3,680. Okay, to find that, yeah, 19,680 divided by 123 multiplied by 23. Okay, and if you can find out one of them, you can find out both of them because you just need to get the difference now. which means 100% is going to be €16,000. So now if you add those two together, you should get back to what we started with, 19,680. Now, if we buy stock, again, related to the last question, the old company account when you had the warehouse that we bought. If we buy stock, we want to keep the VAT separate. Okay, so there is going to be an adjustment on VAT. So I'll write that down. There's also going to be an adjustment on closing stock because it's stock at the end of the year. Okay, that's another one. We've bought the goods. Okay, so it's going to be effect on purchases. That will change. And then the last thing to change, keyword here, is that we received an invoice. Okay, so if we received an invoice, it means we haven't paid for them yet. If we had paid for them, we would have received a receipt. Okay? So an invoice means we haven't paid for them, so we need to pay for them, which means credit is going to change. We still owe someone money for those goods that we bought. Okay, so we'll start with closing stock over here. Closing stock, as you know from note 1, okay, we have changed up here, up above. Closing stock is how much? Closing stock is 89,800. Okay, so in here, from note 1, we have 89,800. Okay, that's note 1. Okay, and we're gonna closing stock. Stock is always valued at the cost price, and the cost price in this question was 16,000. So we're gonna add that on to our closing stock. So 89,800 plus 16,000 is going to give you 105,800, and closing stock is a current asset. Next, we'll do VAT. So we'll have to look at what VAT is in the question already. Again, it helps if you draw VAT as a T account. And we have assets, expenses, liabilities, and income. At the moment, we have VAT on this side, so it's an asset of 2,300. Okay, we're buying the goods. Okay, so they belong to us. So the VAT is going to be an asset as well. So that's going to be 3,680 on this side. Okay, and then to get your new amount, you just add them together, which is 5,980. And because it's on the asset side, that is a current asset. Okay, again, make sure you're labeling everything as you go along, current asset, and put a circle around it, because when you go to put into the account, you need to have things labeled just to make your life easier going forward. Okay. Next one here we have is purchases. Okay. Now, purchases hasn't changed in this question so far. So we need to go into the trial balance of the figure for purchases, which is here, 758,000. Again, purchases is cost price as we separate VAT and the stock. Okay, so purchases is going to be at 100% value, which is 16,000. Okay, and if we add those together, you'll get 774,000. That's your new purchases figure. Okay, so just double underline it. That's your new figure for purchases. And lastly, in this adjustment, we have creditors. Again, creditors hasn't changed in this question. And in the account, creditors is, let me see, creditors, oh, here we go. Creditors on the right-hand side, 65,200. Okay, now creditor, how much do we owe this person in full? We're going to have to pay them the cost price plus the VAT. So we pay them the full amount, which is 19,680. That's how much money we owe the supplier. So you'll add that full amount on the creditors. 19,680 will give you 84,880. And that is your new creditors amount. Creditors, we know, current liability. So again, label it and put a circle around it so it stands out to you when you go back to the adjustment next time.